What's in store for the real estate market as we roll into 2023? Stay tuned for more. Hey, real estate friends, what's going on? It's Mike Gold here with Remax Alliance. Thank you so much for tuning in to today's vlog post where I'm going to predict the future. Well, I'm going to certainly try. But what does 2023 have in store for us as real estate investors, buyers, and sellers as we roll into 2023? Well, before I try to predict the future, I want to be able to explain where the market was, why it's not going to be like the last housing recession that we had in 2015, and then I will be able to tell you what the market is telling me about the future of home prices and what it'll do for you as a home buyer, seller, investor as we roll into 2023. All right, so where did we come from? Starting at about November, December of 2019, the local Denver Boulder real estate market started to stabilize, meaning that we started to see more supply come onto the market and demand levels starting to change. And some of the rapid appreciation that we had been experiencing in previous years, as well as previous months, started to slow down a little bit. Now, the typical change happened in January, and that typical change is not a whole lot of home sellers come onto the marketplace. The holiday hangover wears off, and home buyers come onto the market. So we had a little bit of spike happen. And this was right about in time when COVID shut everything down, March of 2020. Now, when COVID shut everything down, people really didn't know the effect that it was going to have on the real estate marketplace. Heck, I even thought I looked at what happened during China for SARS, and the real estate market there went down about 5 to 9%, and I was thinking the same thing was going to happen. But lo and behold, what actually ended up happening was a massive spike in home buyer demand, fueled by ultra low interest rates and super low supply. So what created the ultra low demand? Well, one, you had the Fed lowering the Fed funds rate to zero. You also had them being the biggest buyers of mortgage-backed securities. This created what is now known to be artificially low interest rates that I don't think we'll ever see again. Interest rates in the threes and, for some period of time, low fours if you were an investor. So again, ultra low interest rates created an immense amount of demand. You also had a lot of folks no longer tied to the location in which that their job or corporate headquarters was located. And so a lot of other states, Colorado specifically, along with others, had a massive influx of people coming in because they were no longer tied to that location. Now, the downside to all this demand is, where were people going to go? We had very little home sellers, and home builders just couldn't keep up. One, because of supply strain constraints, and then here locally, a very low supply of skilled laborers to be able to build the product at the demand levels that things were currently at. So you had immense demand, super low supply, and the only thing that could change in that equation was to see prices increase. And since then, we've seen prices appreciate anywhere in the neighborhood of 12 to 17% per year since COVID started. Now, with all this massive increase in price that we experienced across the nation, and especially here in our local Denver Boulder real estate market, a lot of folks that I'm speaking to have been asking me, hey Mike, is the real estate market going to crash like it did starting in about 2007 here and the rest of the nation in 2008? And the answer to that question is, I believe no. There's a lot of reasons as to why this particular real estate market is not what we experienced in 2015. Let me show you some of the information that I'm paying attention to. First, if you take a look at the graph that we have here, we do not have the supply levels that we have across the nation and in our local market that we had in 2008. Specifically, the month supply of inventory that we have here locally is right around the neighborhood of 3 months. It would need to triple in order for us to have the same supply levels locally that we did back during the last great housing recession. Two, the affordability that homeowners have today, as well as the different types of mortgage products available that were exotic back in 2008, are non-existent today. And let me unpack that statement. Homeowners today are in a much lower interest rate, and subsequently the affordability of their home is significantly greater. So if that homeowner experiences any sort of trouble, more than likely the obligation that they have on their mortgage is significantly less than it was back during the Great Housing Recession. allowing them to stay and maintain, usually in their home. And if they need to sell, they have a lot of equity already in their home. So there's not going to be an influx of homes to where that there is a distressed situation occurring. The other thing to think about with regards to this is if you take a look at the amount of bankruptcies and overall credit worthiness of today's buyer versus that during the Great Housing Recession, it is dramatically different. Lastly, this is potentially going to be considered to be a recession, but it is going to be the job-filled recession, meaning that the employment levels are so extraordinarily high, unlike the Great Housing Recession that we had in 2008. All right, so we understand where we were, what created the rampant appreciation that we had during the pandemic. We understand what factors are in place today and why those factors are not the same as it was during the Great Housing Recession. What ultimately does that mean in terms of real estate prices as we proceed forward to 2023? Now, what we are currently seeing is that same trend to where the holiday hangover has worn off. Home buyers are actively out shopping in the marketplace, and there's not the same supply levels or desired supply levels. So we'll probably see prices continue to plateau as we roll through Q1 or quarter one of 2023. As more supply comes onto the marketplace as we roll through Q1 into Q2 and Q3, we will start to see price levels fall a little bit. Now, I say a little bit, it certainly depends upon geographically here, our metro market, where you are looking. Usually the east side of I-25 is going to have a lot more supply and less demand, and therefore more downward pressure on price. If you're in more desirable locations, Denver specifically, Boulder, Louisville, Lafayette, and Superior, you'll continue to see price levels probably plateau, maybe dip a little bit depending upon where interest rates go in the future. Now, that said, where are interest rates going to go? More than likely, interest rates as we roll through the rest of 2023 are going to be right around the neighborhood of 6.25 to 6.75. Now, obviously, with each fluctuation up, it will wean demand a little bit. But overall, this is going to be what is a new norm. The month supply of inventory is going to be around the neighborhood of 4 to 6 months. Buyers have so much more footing than they ever had in the past, and home seller, you need to be aware that when you price your home, what are you going to be pricing your home off of based upon the comparables in the past? And if so, you need to factor how that interest rate and maybe artificial demand or artificially low supply got factored into that previous home buyer's decision. Now, lastly, if you're a home investor, there's still great deals that are available out to you. What do you need to be looking for? You need to be looking for the cash flow. Is there going to be appreciation for the home? Can you add some value? So again, the market is not going to go into a crash as the media is trying to predict, but it is going to stabilize and opportunities will exist for smart home buyers, investors, as well as if you're a home seller. Pay attention to the marketplace and be working with a skilled real estate professional to ensure that your home is priced correctly and gives you the knowledge and information in which that you need. Bottom line, I would love to be that agent for you, and if you have a prediction on what is going to happen with the real estate market, please drop it in the comment section below, as I'd love to hear it. Until next time.